Good afternoon, ladies and gentlemen, and welcome to the MICROLISE Group PLC Interim Results Investor Presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab that's just situated on the top right-hand corner of your screen. Please just simply type in your questions at any time and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, all questions submitted today will be reviewed, with responses published on the Investor Meet Company platform where it is appropriate to do so. Before we begin, I would like to submit the following poll, and if you could give that your kind attention, I'm sure the company would be most grateful. And I'd now like to hand you over to CEO Nadeem Raza. Good afternoon, sir.
Thank you, Jake, and thank you everyone for joining us today. I'm just going to introduce myself and then let Bill introduce himself as well. So my name is Nadeem Raza. I'm the Chief Executive Officer for MICROLISE Group. I've been with the business for quite a long time. My background is tech, so I started life as a software engineer, but then moved on to running research and development, became technical director and then CEO when we did a MBO in 2008. Bill, would you like to introduce yourself?
Thanks, Nadeem. Good afternoon, everybody. My name is Bill Wynn. I joined MICROLISE in 2007, initially to help Nadeem complete a management buyout, which we did in early 2008. I've got a lot of board experience. I've spent most of my life in primarily IT companies and a fair chunk of them in software companies. I've also done roles for private equity on behalf of private equity organisations. So I'm used to operating A, in that environment, B, in the whole M&A space where we've delivered value through that route as well.
And Nick Whiteman is our finance director, but he's not actually presenting on this call today. So just a few slides to give you a background on who we are. We are a leading provider of transport management solutions to large enterprise organizations. So what we mean by large enterprise organizations are companies that have vehicle fleets of over 500 vehicles. We deal with lots of smaller customers as well, but that large enterprise space is really our sweet spot. A few bullet points and highlights about what we do. So we help those customers with their complex needs, and we do that by providing them with some of our proprietary software and also hardware. We supply design and manufacture and hardware, but we are actually a software business. That's how we classify ourselves. And our business model is software as a service. So lots of recurring revenue. Our typical contracts are 5 years. So again, really good future visibility of revenue and contracted revenue with our customer base. What our software does, it allows our customers to automate a lot of their critical processes. It provides very real-time information across their operation, and it helps them save money, reduce their emissions and other efficiencies. We've been around since 1982, so we're a well-established business. We have over 570,000 active subscriptions, an extremely low churn rate. It does say here less than 1%, but over the last 12 months, that churn rate has been less than 0.1%. So we are very sticky with our customers. We have over 600 staff, 5 offices around the world, and about 400 of those large enterprise customers. As I say, lots of smaller customers as well, but that's our sweet spot in that enterprise space. Our revenue for FY 2021 was just over 60 million, of which about 40.2 million of that is annual recurring revenue. And in that large fleet space, over 500 vehicles, we really dominate that in the UK. We have a 58% market share, and in particular industry sectors like retail, we have a 90% market share. So all of the top 15 retailers in the UK use our products and services for their transport and distribution operations. We are a global company in the sense that we have deployments in all of the countries around the world, apart from North Korea. We even have assets that we monitor and manage in Antarctica. So again, truly a global organization, and we win lots of awards. So we have 3 Queen's Awards for Enterprise over the last few years. 2 of those were for innovation, and 1 of those is for international exports. So a bit of background, more detail on our products and solutions. So we have a very modular offering. So lots and lots of modules for different problems that customers have, but we group them into these 6 categories. So I'll start off on the left-hand side with fleet performance. So this is vehicle tracking and telematics, which you're probably very familiar with. So it's monitoring where vehicles are and what they're doing via GPS. So that's easy. Lots of organizations do that. But we also collect lots of other information as well. So everything from how the asset is being used, as well as engine diagnostic information, as well as other information from other sensors on board, such as weight, temperature if you're moving temperature controlled goods, door opening, door closing sensors to contend with theft and security, as well as power takeoff and a whole variety of other sensors that can tell you about how that asset is operating. Our next module group is fleet compliance. So if you operate 1 or more trucks, you have a whole load of regulation and compliance that you have to adhere to. And that means you have to collect information on how you're maintaining that vehicle, as well as information about the drivers that are using that vehicle and ensuring that they're operating within their driving hours regulations as well. And all of that information needs to be available historically for audit purposes when you are audited by the DVSA. So it's easy if you've got 3, 4, 5 drivers or 3 or 4, 5 vehicles, but if you have 10,000 drivers, in the case of one of our customers, DHL, then there's an awful lot of information that you have to gather and be able to show that you are compliant to all of those regulations. Next group is fleet safety. This is all concerning how to make sure that drivers and vehicles are operating in a safe way. And so we provide a whole series of different modules here, including cameras, which are compliant to the new DVS standard, which is to do with having left and right cameras for trucks operating in London, ensuring that they don't hit cyclists when they're doing left or right turns. So we have cameras that are linked to our black box recorder, very much like a black box that you have in an aircraft that records everything that happens before, during, and after any kind of incident, and allows you to view all of that footage remotely. And we also have applications like panic alarms, should there be any kind of hijacking, and things like bridge strike avoidance. So we knowing the height of a particular vehicle or trailer, we can automatically warn a driver to ensure he doesn't try going under a bridge that is too low. Next group is planning and optimization. So if you're trying to plan the workload for 5 vehicles, that's pretty easy, working out what orders are going to get delivered by which vehicle and what driver is going to operate each one and what route they're going to take. You could do that with some mapping tools and a spreadsheet. It's not very difficult. If you have 5,000 vehicles, that's an enormously more complicated task to do. And also to then optimize that so that you're using the least number of vehicles, driving the least number of hours, it is really adding more complexity on top of it. So we have a suite of software here that does exactly that. It allows you to plan those deliveries, plan those goods, plan those drivers, and then optimize it so that you're using the least amount of time and the least amount of fuel to make all of those deliveries. Of course, once you have a plan, you then have to execute it. And again, lots of things can go wrong here. Drivers may not turn up because they're sick, vehicles get stuck in traffic, deliveries are delayed, customers reject orders because they may be damaged in transit somewhere along the supply chain. So you need, again, a suite of software here that allows you to automate all of those reactive processes so that you can provide a really great customer service to your end client and ensure that you can fix those delivery issues very, very quickly without having to throw lots of manpower at it. And that's what our journey management group of modules allows you to do. Of course, to be able to do that, you need to be able to communicate with drivers. And so we have a range of hardware and software that allows you to do exactly that, including our tablets that you can see a picture of here on the screen. So we can manage the entire daily shift for a driver, right from when he starts to the end of his shift. So that includes communicating to the driver, going through and explaining to him his workload, providing satellite navigation to aid him in his travels, and of course doing all of the risk assessments and goods in checking, etc., that they may have to do when entering particular sites or delivering to particular customers. So we have a whole range of solutions that we can provide to customers to help them run those logistics and transport operations. It's quite common that customers do not buy all of these things in one go. Generally, customers buy 2 to 3 of these modules or groups of modules at the beginning of their journey with us, and then we have a dedicated team of salespeople and account managers that help to upsell and cross-sell other modules into those customers. And we genuinely see significant growth in customer revenue over multiple years. And again, every time customers implement a new module, a new suite of modules here, they tend to extend their contract with us. So we have a rolling 5-year terms with many customers. And again, that helps to provide that 0.1% churn and very sticky relationships that we have with our customers. How do we help our customers? Well, this slide gives you a view of that. So by planning those journeys and those deliveries, we help reduce the mileage that's traveled. Because we collect a lot of information about how an asset is being used, we can tailor training, online electronically provided training, to each individual driver and focus on their specific driving skills and bad habits. All of those things help to reduce the fuel used, and that helps to reduce the emissions that are generated by that operation. And those 4 things really is what helps us earn that green economy mark from the London Stock Exchange. Of course, if you're traveling less miles in a vehicle, you reduce the wear and tear, you have fewer accidents, and it's not uncommon for our customers to see 25% reduction in their insurance premiums. But the key thing that we are trying to deliver and help our customers with is improve their fleet efficiency and utilization. That ability to do more orders, deliver more orders with the same or less numbers of vehicles, trailers, drivers. We eliminate all of that paperwork because everything is done in real time, and that real time visibility is not just within the transport operation itself, but that visibility goes out to their suppliers, their supply chain partners, and of course the end customer, giving them a really enhanced customer experience. As I mentioned, we operate all around the world, but we have 5 offices. 2 of those are in the UK, which is our headquarters in Nottingham. And then we have sales and implementation support offices in France and in Australia. And we have a large development group in Pune in India. Just some highlights from our most recent interim results. So for the 6th month to June 22, like-for-like revenue was 30.7 million, up 5%. Recurring revenue was up 10% and ARR was also up 10%. Again, we maintain that very low churn rate of 0.1%. Certain highlight was cash. Cash was up 19% to 15.8 million. Just to give you a view of our customers market and what's going on in that logistics space, still lots of disruption in the wider transport sector, fuel costs going up, the macro environment whereby we're seeing the growth of e-commerce and the demand from consumers to deliver more lower value orders and lower value goods, but in a far quicker and more efficient way. All of that is driving lots of complexity and competition in that transport segment. There continue to be driver shortages. It is getting better, but there are still definitely driver shortages in the marketplace. And of course, the microchip shortage is impacting the availability of new, more efficient vehicles. So lead times earlier on in the year were as high as 12 to 14 months. We are seeing them improve now to things like 6 to 8 months, but that's still a far cry from the 6 to 8 weeks that was a typical lead time pre-pandemic. All of these challenges that our customers face are things that our products and solutions are geared towards helping them with. So helping them do more with fewer vehicles, fewer drivers, and also helping them deal with those complexities of delivering large volumes of low value orders. For MICROLISE itself, our challenge has continued to be component shortages. We came to the market a few months ago and said that we expected Q2 this calendar year to be the worst in that cycle, and that Q3 and Q4, based on our discussions with our suppliers and other industry groups, Q3 and Q4 was going to be better, but normality wasn't really going to return until the latter half of 2023. And we still stand by those statements, and we are seeing light at the end of the tunnel. We're still seeing improvements in Q3 and Q4, so our expectations remain the same in terms of component shortages. That lack of new vehicle availability has impacted in terms of new projects that we're doing with customers, because they haven't been able to get hold of vehicles, and therefore that's delayed implementation of our products onto those new vehicle fleets. But we are still seeing strong demand because the whole market in general is under pressure to continue to show further efficiencies. So there is not a shortage of demand for our products and services, but there are problems in delivering and supplying that demand. Inflation, something that's appeared more recently and probably in front of mind for a lot of people. We are seeing some inflationary pressure coming through from suppliers, and we've been able to largely pass that through onto customers through increasing pricing. However, we don't think that this is the end of that cycle. We believe there's still 6 to 9 months more of inflationary pressure coming through, and we continue to monitor that and deal with it in various ways, and looking at how we can either negate that or have to pass that on to our customer base. I'm going to hand across to Bill now just to cover some of the financial highlights.
Thank you, Nadeem. This slide just illustrates how we measure and dissect revenue within a business. We divide our revenue into non-recurring and recurring. The recurring is the larger blue line at the bottom, but our non-recurring, which essentially are onboarding revenues, things like the hardware and services, professional services, installation, that sort of thing. And our revenue year on year increased 5%, as Nadine mentioned. Our recurring revenue was 10.5%, 11%, up to just shy of 20 million. And that's primarily a lot of the growth through our OEM as well as our direct customers. Hardware revenue increased 10%, again through that large demand with OEMs, which compensated a little bit for some of the new vehicle issues that Nadine mentioned in his last slide, which actually translated for us to a reduction in services revenue from 3.2 to 2.1, primarily due to that reduced availability of new vehicles, which impacted on new installations. Thanks, Nadine. Our P&L saw us grow our total gross margin slightly from 59 to 60%, but that represented a 7% year-on-year improvement, and that is the trajectory which we're really penetrating going forward, as we've got a number of new initiatives, new products, higher value products that we'll bring into market. One of the margin enhancements was new hardware which we've introduced, and that's resulted year on year in our hardware margins increasing from 17% to 27% year on year. And as I say, real strong OEM volumes that are supporting some increased numbers there. As I mentioned, some of our service revenue reduced, and that led also to a margin reduction slightly from 51% to 50%. And that's because of the kind of delay rather than decline I put there in high margin professional services that would ordinarily be linked to new product. In line with our market expectations, we delivered a relatively flat EBITDA performance because our growth is going to come in the second year. That was because our admin expenses, as you can see there, grew 8%, but that included approximately £900,000 of costs that would not have been in the comparative period last year, and that's things like which Nadim's got a slide on, our conference, which is the largest of its type in Europe. That has been postponed for the last 3 years because of COVID, but that got reintroduced this year with a tremendous conference. But that costs us net of about £500,000 a year, but is hugely positive in terms of sales opportunities. We also included in that figure, we now incur about £400,000 of costs simply just being a listed business. So as I say, those numbers are in line with what we expected. Thank you, Nadeem. From a balance sheet point of view, really strong balance sheet as you'd expect. Just wanted to pull out one or two numbers just to explain that further so it doesn't concern you. You'll see both current and non-current. We have quite significant trade and other payables. Just to confirm that that's non-cash. Those numbers are primarily deferred income because a number of our customers and OEMs pay us up front for contracts they add each month. And also at the bottom, one of the things I wanted to do when we IPO'd was increase our retained earnings, because we had a major reserve at the time which dated back to a restructure we did in 2018 as part of the preparation for the IPO, and we've made that distributable. So we've got quite significant distributable reserves. Not that we're planning to issue any dividends or anything anytime soon, because we're concentrating on M&A, but certainly when we're in a position to do so, because we are very cash generative, I'll certainly have that chest to be able to do so. Thanks, Nadeem. As Nadeem mentioned, cash flow was very positive. We increased our cash flow to 15.8, which year-on-year comparative, which is a very good in this instance, because we did raise some money as part of the IPO, increased 62%. We did pay down all the debt in the business, and just to remind people that have been on it previous shows with us. We do also have a revolving cash flow facility with our bank, which is HSBC, which we can draw down on at any time, of 20 million. So combined, we've got just shy of 36 million, of which we are earmarking to deploy in some M&A projects, which Nadeem will pick up on in a second. Thank you, Nadeem.
So some key points about us as a business. We have a great track record of success as a business and also in helping our customers achieve success as well. We're financially sound and we're continuing to grow, even given the background of the last 2-3 years. We've continued to grow through COVID and also more recently through whatever's going on in the marketplace. We're trusted by lots of leading hauliers and transport operations, and in fact some of our relationships go back decades. And that also includes our relationships with OEMs and other truck manufacturers. So our relationship with JCB goes back 14 years. Our relationship with MAN Trucks goes back 16 years. So we have very long-term and sticky relationships. We invest heavily in product innovation, and we have over 150 people, so over a quarter of our staff geared towards product development and innovation. And of course, we operate 24/7 as our customers do, and also because we're a global business, and we have a lot of people focused on helping our customers succeed, because we know that through their success, we also have success as well. In terms of our growth strategy, I'll cover the right-hand side of this slide first. So we have we have a dedicated sales team, as I mentioned earlier, that upsells and cross-sells into our existing customers, and we're continually developing new products, again, that we can sell into our large existing customer base. So that really grows revenues, and we've got a long history of growing revenue with existing customers through expanding our footprint within their operations. When it comes to new customers, again, we're continuing to grow that both UK and internationally, and also we're gearing more of our products onto that mid-fleet space. Now, what we mean by mid-fleet is customers that have fleets of between 50 and 500 vehicles. So as I mentioned earlier, we have a 58% market share in fleets greater than 500 vehicles. But in that mid-fleet, we have between a 22 and a 28% market share. So we've still got lots of room to grow in that area in the UK. And that's an area that we've had a particular focus on over the last 18 months. And we've shown good growth in the UK in that segment. Our French and ANZ, Australia, New Zealand markets have both grown. ANZ is slightly ahead and more advanced than our French space, but that's mainly down to the way that they've come out of lockdown. And our OEM and reseller growth has continued as well. So with MAN, we've introduced new brand vehicles in Dubai, Australia, New Zealand, Malaysia, and a number of the African countries. And of course, our products and solutions are on their new range of EV fleets. And in the case of JCB, our product is also on their latest hydrogen-powered construction equipment as well. And a couple of key things, particularly in the retail segment, where we have a nearly 90% market share in the UK. In the last few months, we've renewed multi-million, multi-year contracts with Tesco and Asda in the UK, and also Coles, which is a large supermarket chain with about 2,500 supermarkets in Australia. So again, it emphasizes our strength and footprint in that retail space. So just a general summary on outlook. We've continued to grow, and we expect that growth to carry on in the second half of the year. We've introduced a number of new products, including a new compliance software solution for the light commercial vehicles and vans. We expect more compliance and regulation to come into that space and that market segment. We brought back our transport conference after a bit of a hiatus, and I'll have another slide on that in a moment. And despite the market headwinds that we are seeing, we're still seeing strong demand. It's just impacting our ability to deliver in the short term. The transport sector and industry sector is growing. It's the fastest growing segment of the industry in the UK. And we're confident that we are going to hit our end of year market expectations. Just a few other slides. Our transport conference that we ran in May at the Coventry Building Society Arena, largest of its type in Europe, over 1,000 delegates. We were fortunate enough to have Her Royal Highness Princess Anne presenting and also giving some awards. But just to give you an idea of how respected that conference is, we had speakers from Microsoft. We flew in from the US to speak. We had a number of government people from the Department for Transport. We had the CEO of the DVSA, the CEO of Network Rail, and also Mercedes-Benz and a number of other OEMs used it as a platform for making new product announcements. The reason I'm highlighting this is that next year's event in 2023, again, which will be held in May, we're also going to incorporate some segments for investors and analysts. So please look out for that. Probably in Q1, we'll make some announcements regarding what we're planning on doing for investors during that conference. So again, will allow you to learn a lot more about the business and the marketplace as well. Just a few points on ESG. As a business, we support a number of charities, TransAid being the largest one of those, but a number of others that we support as well listed there. We do a lot of work in bringing in graduates and apprentices. Again, that's our way of trying to deal with that talent gap that we see out there and that difficulty in recruiting the right kind of skills. And of course, we're doing lots of things in terms of trying to reach net zero in terms of our carbon footprint. So we're moving a lot of our company vehicles over to fully electric vehicles, introducing solar panels. We've changed a lot of our lighting. So there's a whole variety of things that we're doing on that ESG front. And there'll be a more detailed report showing our plans and our targets and goals for the coming years. We'll hope to provide that report before the end of the year. And that essentially brings us to the end of the presentation, and I'm going to hand back over to Jake to say a few words.
Nadeem, that's great, and Bill as well. Thank you very much indeed for your presentation this afternoon. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab that's situated on the top right-hand corner of your screen. But just while the team take a few moments to review those questions that were submitted already, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Bill, Nadeem, as you can see in the Q&A tab, we have received a number of questions throughout today's presentation. So thank you to all of those on the call for taking the time to submit their questions. And if I could just hand back to you to respond to those questions where it's appropriate to do so, and then I'll pick up from you at the end. Thank you.
Okay, great. Thank you. So first question is about who do we typically displace in the market, and are the competition global? It's fair to say that because that slide that I showed you earlier listed a number of different modules and areas that we sell products and services in, whether it's tracking and telematics or whether it's journey execution or planning and optimization. we tend to displace different companies because there really isn't anybody out there that does all of those different things. So what we find is that customers really like the fact that they can buy a very holistic, totally integrated solution from one company, i.e. us, that does all of their operational needs, and they can buy that and they can implement it in stages, and they don't have to do it all at once. And when they're ready for a new module or ready for implementing something different, they can just turn it on very easily, and it requires very little integration to be able to use it. And that generally means that we are displacing different organizations with different aspects of our product portfolio. So there isn't one common company that we pitch against. We pitch against different companies depending on which part of our portfolio that you're looking at. A lot of those are international businesses that again specialize in a particular slice of that product portfolio, but on a larger scale. However, we still continue to win against those companies because of the breadth of our portfolio. The next question, more general question about sterling and dollar parity and how that might impact the business. We as a business are fairly naturally hedged when it comes to dollars and euros. We buy products in dollars, but we also sell products in dollars. So generally the currency change doesn't have a hugely significant impact on us. And so, generally that's it's not going to impact us as much. What it will do, however, is obviously drive inflation in the market in general. So we do expect, as I said, to see more inflationary costs coming through from suppliers that we will have to deal with. But that's true of everybody. Next question is on focusing on new products and product innovation and our growth strategy and expanding our geographic footprint. So the question is regarding what geographies are we focusing on. Well, we're particularly focused on Europe and our Australia and New Zealand business. We're not doing anything in North America, South America, or any of the other continents directly. That may well change through acquisition. As I mentioned earlier, our ambition and our key things that we're looking for target acquisitions is companies that can either expand our product portfolio further by adding new modules, new technology into our product set, and increase our geographic footprint. So it's quite likely that we will expand our geographic footprint into other regions beyond Europe and ANZ through acquisition. How will the strong Indian rupee versus sterling impact the operations in India? Again, it will have an impact, but we also sell product in rupees in that space as well. So there is a bit of natural hedging that goes on there. So there will be some impact, but it won't again be significant. Online delivery, how does this fit in with TrueVan acquisitions and the likes of Amazon? Are they clients? We do some work with companies that are suppliers into Amazon. So a number of our third-party logistics companies run some of the distribution and transport operations for Amazon. So we deal with Amazon through those mechanisms. And secondly, the TrueVan product is about compliance, and we see some of those regulations regarding compliance as we see them on trucks, which is all to do with how you maintain vehicles and how you manage driving hours, i.e. how many hours a person is allowed to drive a vehicle before they have to take a break, and rest periods and so on. We see some of those regulations and compliance issues coming down into those smaller vehicles, particularly vans. And there is some new legislation that's going to be going live in Europe regarding vans, and particularly regarding vans that do cross-border activities. So we're getting our product set ready for those legislation and regulations coming online. Next question was, from an M&A perspective, have you looked at or considered an opportunity in the US and or Canada? The short answer to that is yes. Our M&A is not just looking at UK businesses. We're also looking at businesses in other regions, and also a number of the businesses that we're looking at have operations in multiple countries as well, and across multiple continents. So inevitably, through acquisition, we will end up growing our geographic footprint. And I think that was the last question.
Nadeem.
So thank you.
Nadeem, absolutely, and Bill as well. Thank you very much indeed for addressing all of those questions that came in from investors this afternoon. And of course, if there are any further questions that are submitted today, we'll make these available to you immediately after the presentation has ended for you to review and then add any additional responses where it's appropriate to do so. Nadeem, perhaps before redirecting those on the call to provide you with their feedback, which I know is particularly important to yourself and the company, if I could please just ask you for a few closing comments to wrap up with, that'd be great.
Thank you. So a few close comments. We are a business that operates in a market that is the fastest growing market segment in the UK, transport and logistics. We are a SaaS business, so we tend to be very stable and have lots of recurring revenue. And the other important thing there is that our standard contracts with our customers are 5 years. So generally, we have very good future visibility of revenues coming in. So hopefully those are key points that should make you think about us as a business and comparing us to other businesses that you may be looking at in your portfolio.
Nadeem, that's great. And Bill, once again, thank you for updating investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of MICROLISE Group PLC, we would like to thank you for attending today's presentation. That now concludes today's session, so good afternoon to you all.